Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into discussions on what's impacting mortgage rates on any given day, on a daily basis, whether it might come from economic calendar or geopolitical news or headline news, something that could be impacting rates. Sometimes there's market sentiment changes. We try giving explanations as to what's going on, and that way, if you're following mortgage rates, which if you're watching this video, you most likely are, just trying to give you an idea of what's going on here, and hopefully, if you're following it for a refinance or purchase, at least give you an idea as to what's going on and help you to make an informed decision here. A little bit about myself is I am a loan officer. I do work with the national lender. We do loans in all 50 states. So if you guys are looking to refinance purchase, we'd love to be able to help you guys. But more than that, we'd like to be a resource for you folks. So if you guys got questions about anything, again, please reach out. We're here to help you guys out. Without further ado, we'll start off with the economic calendar today. We got one little thing that I always like to kind of touch on, or at least glance at, is we get a report from the MBA, and that report is on the mortgage loan activity report. So that lets us know if there's a increase or a decrease in loan applications for a purchase or a refinance. So as we can see here, purchase side of things did come down slightly here, and then also refinances dropped quite a bit here, actually by about 200,000 or 250,000 actually. Now, the report on today, we got the new home sales, and new home sales dropped 2.5% or 2%, excuse me, from month over month from January to February. Its revision, we had its number in initial number that came in January was revised lower from 801,000 to 788,000. Forecasters account for 810,000, an increase. However, it went the opposite direction to 772,000. Of course, we still have we still got demand out there. However, the affordability is now shrinking on that due to the higher rates. So we are seeing an increase in higher rates that is affecting overall sales. Now, it's not making home sales come down. I mean, or at least home values coming down. It's just decreasing the amount of appreciation we're getting there. So things are slowing down a little bit in that category as well. Now, headline news, we are getting a few Fed speakers talking a little bit. If you guys were around Monday and caught that, we had some pretty hawkish comments from Jerome Powell. And again, that's what kind of disrupted the markets for the most part. They were pretty hawkish. We're getting some more hawkish comments by a few others that are speaking today. And those are comments that they're basically stating that they could get more than a 0.25% increment in rate hikes, that they could bring it to neutral, or which is typically between 2.5%, or even higher if they feel it's higher. So they're basically kind of leaving it open-ended where they could be more preemptive in basically being more aggressive with the rate hikes, and then even with the balance sheet. That could be starting here very soon as well, maybe as soon as May. So again, we'll take a look, see what's going on. However, this is what the market's reacting. Stocks are down today on a lot of the talk. We were up the last couple of days. Yesterday, oil jumped up over $100 a barrel. We're up to about 114, 120 range with oil again. So we're getting that in line. Again, of course, investors are kind of watching what's going on with Ukraine and Russia as we get a lot of political aspects taking play as a result of it as well. And then, of course, we got the supply chain disruptions going on due to the lockdowns in China that started last week here. So, mortgage-backed securities, we are actually doing all right today. We've had kind of a choppy day so far. I'll show you what it looked like. So early on, we were down, we rose up, so we had a pretty sharp incline right off the bat within the first hour. However, right around 7 o'clock Pacific Standard Time, we started having a bit of a sell-off here. And then since then, over the last maybe over the last hour or so, we've been having a steady increase a little bit. So now we're starting to see an increase. So we may have seen a bottom here, but right now we're coming back a little bit and making our way out. So pricing is better than what we saw yesterday, which is the good news. So pricing should be better than what we saw yesterday. Monday was a pretty horrendous day after Powell's comments. It was a bad day as it was, and it just exacerbated that bad day, and up closing down about 83 basis points. And then yesterday we closed down another, I think it was around 23 or so. Today we're up about 20 basis points, so we're kind of regaining some of that a little bit. How much will we gain? It's hard to say. But again, slightly better than what we left off yesterday, which is good news for those who are in the market to refinance or purchase here. Yields are off their highs as well. Yields were spiked all the way up to about 2.4. We're down to just about 2, pretty close to like 2.4 range. 2.39 I think does look like it hit. 2.39, so we're real close to the 2.4 range. Right now we're just about 2.34 right now. As you saw, that just changed here at 2.34 right now on the 10-year yields. Lastly, we'll take a look at the average rate for a conforming loan limit. These do have points built into them. So 30 years now jumped up to 4.72%, and then 15 years now up to 4.08. So we're for the most part in the 4% range versus being back in the 3s we were just a few months ago here. So anyways, if you guys like these videos, please help us out and smash that like button. But if you guys got questions, we'd love to be able to help you guys out. So answer any questions you guys have. So please reach out if we can help you guys out in any way. You guys have a great rest of your day. Thanks so much for watching. We'll see you guys in tomorrow's video. Bye-bye.